Well, folks, we've talked about a lot on the show. Joe Biden's economy has been inflation-ridden. Inflation continues to run about 50% hotter than you're supposed to want it to run if you're the Federal Reserve. Joining us on the line to discuss all of this is Phillip Patrick, precious metal specialist, spokesperson for Birch Gold Group. They've been our gold favorites for years, of course, and they're a big sponsor of the show. Phillip was born in London, earned a degree in politics and international relations at the University of Reading, and spent years as a wealth manager at Citigroup in London's Wall Street before taking his current position with Birch Gold Group back in 2012. Phillip, thanks so much for the time.
Thank you for having me.
So let's talk about Congress finally passing a federal budget 6 months into the fiscal year. What does all of that mean for 2025 and beyond?
I mean, it doesn't look good. Looking at the 2025 proposed budget, it looks like more of a wish list, not so much a budget, but part of his re-election campaign. I mean, $7.3 trillion in total spending. That's $1 trillion more than he wanted for 2024. It's just absurd. Now, it does come with proposed tax hikes, but they would only pay for 1/3 of the additional debt. Now, thankfully, it looks like there's zero chance of this passing the House, which is why it looks to be more political theater than a serious budget. But essentially, it's more of the same thinking that got us where we are today. The Biden regime has already racked up $6 trillion in debt. That's almost as much as Obama's total debt over 8 years. And of course, Biden's done it in a little over 3. The economy is suffering on the back of it. So his solution is just more spending and more of the same. Of course, we know the 2024 budget was finally passed on Saturday, and it largely tracks with a deal made with former Speaker of the House McCarthy, worked back in 2023, which is absurd, right? We can't forget McCarthy was ousted to prevent exactly this from reoccurring again. And here we are again, another $1.7 trillion in debt. It's a complete and utter surrender. It's just outrageous. And ultimately, as we know, it's unsustainable. We cannot continue down this path.
Well, the fact is that as Congress continues to kick the can down the road, spending more and more money, borrowing more and more money, they're always leaving it up to the Federal Reserve to sort of fill in the gap, which means that it really is the Federal Reserve in control of the nature of the American economy. Central banks have far too much control over pretty much all the Western economies right now. This is why everybody who's an investor is constantly watching to see which way Jerome Powell is blowing on any given day, looking for the weather vane. Well, right now, the Federal Reserve has claimed that they are going to look at several interest rate cuts this year, but the inflation rate is currently running at 3% annualized minimum, maybe running higher than that. And we're supposed to be at 2% before you start cutting interest rates. If you cut the interest rates, presumably the inflation goes back up. What do you think are the prospects of future interest rate cuts? Are they going to cut just before the election to try and boost Biden? What do you think is going to happen here?
Look, 2 months ago, I would have said absolutely yes. And it looked like we were getting set up for that. And as you implied, certainly a political move given where inflation is. Today, I'm not so sure. I mean, Jerome Powell gave a 60-minute interview back in February, and he said, and I quote, "It's probably time or past time to get back to having an adult conversation amongst elected officials about getting the federal government back on a sustainable fiscal path." And I thought he made the point even clearer when he said, and again, I quote, "Every generation should really pay for the things it needs and not hand the bills down to our children and grandchildren." For me, this was basically a slap in the face to the Biden administration. This is the man who's responsible for maintaining the dollar's purchasing power, essentially telling elected officials to stop, to grow up and stop robbing from our grandchildren and pay our own bills. I have to say, I haven't been Powell's biggest fan, but I respected him for this. And, after all, he may not lower interest rates, particularly on the back of surging inflation on the last 2 reports. So we'll wait and see, but he may have his legacy in mind now and do the right thing.
So despite everything that's going on, obviously, America, in terms of its economy versus the rest of the world, we're sort of the best house on a bad block right now, in the sense that investment dollars are still flowing into the United States because there's legitimately no place else to put those investment dollars. With that said, there has been a move by America's enemies to de-dollarize. That's happening China, it's happening with Russia, it's happening with many of the BRICS nations. What do you think is the future of the American dollar if we continue to spend like this?
Look, it doesn't look good. I think you're absolutely right. We are, pardon the expression, the tallest midget in the room still, but we are creating a case for de-dollarization, and we're doing it in two forms. First of all, devaluation, right? Let's not forget the dollar's lost 16% of its purchasing power since the pandemic. Now, we see that as inflation here in the US, but other nations that own dollars see it as currency devaluation, and they're seeing, the value of their purchasing power starting to dwindle. The other side, of course, is weaponization, right? When Biden regime froze Russia's dollar reserves, they sent a message to the rest of the world: your assets could become liabilities overnight if you make a decision that isn't popular here in the United States. Now, what we've seen on the back of that is 2 record years consecutively of gold buying by central governments. And it's pretty obvious why, right? Number one, it's the only asset that isn't someone else's liability. It cannot be defaulted on. By buying gold, it achieves 2 things for the BRICS and other nations. Number one, it's just been a good trade, right? In the same time period that the dollar has lost 17%, gold is up exactly 17%. Secondly, by Russia, China, Brazil, by them holding dollars, they're creating demand for dollars. The more demand, the stronger the dollar becomes and the stronger the stick we are using to beat them. So by buying gold, it allows them to de-dollarize, puts pressure on the dollar, and longer term will weaken the argument for the dollar as global reserve. So I think the train of de-dollarization can continue, and it's concerning to say the least.
Well, that is Phillip Patrick of our friends over at Birch Gold Group. Phillip, really appreciate the time and the insight.
Thank you.
And again, guys, Birch Gold has been the exclusive gold partner of the Daily Wire for over 7 years now, helping thousands of our listeners. They can help you as well. Text Ben to 989898. Get your free info kit on gold. Then talk to a precious metals specialist like Phillip about protecting your savings from persistent inflation with gold. Again, text Ben to 989898 right now.